Welcome to Money Wisdom, sponsored by Johnson Brunetti. I'm Natasha Lipchenko. Here with tips on managing our money is Eric Hogarth, certified financial planner and Johnson Brunetti partner. Eric, thank you so much for being here.
Great to be here.
So today, let's talk about investing. The market, it goes up, it goes down. There's so much for investors to consider. So let's start with a volatile market, Eric. What does this mean?
Volatile means it goes up and down, which is normally what it's doing. Depending upon the period of time, we do go through these abnormal times where the market seems to be going up, 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 up. And those can be dangerous times, particularly because those managing money on their own will be like, this is great. It's going up and up and up and up. And people take more and more and more risk. And then when it goes down, which it always does, and then usually comes back. I mean, that's what we've always seen. People panic. And they panic because when the market's done well for a long period of time, they have a tendency of taking more risk. So a volatile market, it's a normal market, but it depends how much are those up and down swings. So
we're going to stay on the topic of these volatile markets. You have some tips for us to navigate this. The first one is you say to know that timing the market doesn't work.
Yes. So we do this all day, every day, not timing the market, but talking to people about their retirement and their investments being a big part of that. And people say, well, when the market is about to go down, I'm just going to get out of it. And then I'm going to wait it out. And when the market goes back, I'm going to get back into it. Probably not. Right? No one's got a crystal ball. And if people on Wall Street are not successfully doing that, and the smartest computers in the world aren't pulling it off, no, people get lucky. And Warren Buffett, right? One of the most famous investors of all time says, I wouldn't own a stock for 10 minutes if I wasn't comfortable owning it for 10 years. There's a difference between investing money and gambling with money. When people ask the question of what stock should I buy this week to make money by the end of the week, stop. That's not investing. So you need to make sure that you have balance. You need to make sure that you have not all your money in the market, because there will be a time when it goes down. And if you're a young person and you need to get your hands on that money to pay for things a young person to pay for, or you're a retiree who's relying on it for income, you can't have all your money tied up in the market, because there will be periods of time when it's down and you don't want to touch it. Right. So you need balance.
Balance, very important tips there. And now this next one is downturns are normal. Why is this important to know?
Because it goes down. We look at periods of time. You look at, 2008, which is a long time ago now, or you look at like March of 2020, when the market was going down and down, and people panic when they don't have a plan. So that's something that everyone needs to hear. No matter what phase of life you're in, you need to have a plan. We hope best case. You have to plan and prepare worst case as well. There's going to be times when the market's down. And that's when you hear people say, well, you buy when the market's down. And that is the best time to be buying. But again, you can't time the market. So keep in mind that it's a long-term strategy. And if you don't think of it as a long-term strategy, you probably shouldn't be in it.
All right. And now in a volatile market, Eric, you say it's also important to invest consistently.
Yeah. So think of your 401k. Right. So why does someone's 401k typically do well? Well, because every time you get paid, I get paid, it just automatically goes into the 401k. And sometimes the market's high, right? Sometimes the cost of an investment's high. Like if you think about buying a car, well, one week the cost of that car is $15,000. The next week it's $10,000, and it doesn't actually move like that, but stocks do. So if you're always buying, sometimes it's high and sometimes it's low, but your average cost will be lower. That's called dollar cost averaging. And then you'll make sure that you're always saving, and you're going to have the best results as a result of that. And the reason 401ks work is you do it for a really long time, and you typically don't mess with it.
Okay, good tips there. And now finally, Eric, you say get help to survive a downturn.
So our world is retirees or people approaching retirement. And when you think about the market and you think about what's known as an index, right? The S&P 500 index is the 500 largest companies in the United States. So you can just buy an index and own all of them. Vanguard got famous for it, and Vanguard's good stuff, but it goes up all the way and it goes down all the way. And typically someone in retirement doesn't like all of their money doing that. Even if it might make you the most, it's going to be the bounciest ride. And the whole reason you save money in the first place is to be able to sleep at night, to be comfortable, to be able to live how you want to live. So everyone's comfort level is different, but what you want in retirement is steady. So you don't want to be going down all the way. It's not easy to make more in a good market. What if you just focus on losing less in a bad one? So have these conversations before that happens to make sure that you do have a plan. Again, best case, worst case.
Sure. And now, Eric, if we want to learn more about, surviving a volatile market or just about investing in general, what offer do you have for our viewers today?
So the book we have today, it's called Riding Market Highs, which is fun stuff to talk about when we're in good times, but it also sheds light on what do you do when it's not like that, and how do you keep a plan going in that environment, no matter what phase of life you're in. So you can get it at moneywisdomtv.com. Again, it's called Riding Market Highs. It's absolutely free. I'd read it no matter where you are, hopefully provide some insight, different perspective to think about. So again, it's moneywisdomtv.com. We'll get it to you. And I think it's worth reading.
All right, as always, that is such a great offer. Thank you, Eric Hogarth from Johnson Brunetti. And again, if you would like to learn more and to receive this offer, go to moneywisdomtv.com for CT Style. I'm Natasha Lubchenko, and we'll see you next time.